Welcome back to Fast Market, everyone. Kevin Hinks back here for our second segment, along with Tom White. Now, I'd like to do a quick market update here as we got the market moving ever so slightly. The S&P now down about 0.16%, about a sixth of a percent, down 7 points. The NASDAQ down 130, now about 7/8%. The Russell 2000 up 1.8%, now 40 points, and the Dow Jones up 7/16, about 145 points. Tom White, we're drifting along here now, having a nice little day. This market is rotating, though. Really good day for, it's amazing, Tom. The industrials, the financials, having a big day. That's Boeing, Caterpillar, 3M, all the big names, Tom.
Yeah, and I think we discussed that earlier, a little rotation out of some of these growth names due to the interest rates. But the momentum that you're seeing, especially in the energy sector, Kevin, we don't talk about that a lot, but it's still a big portion of the Russell 2000. That's why you're seeing that up 1.8% as crude prices rise. But then, if they make some headway, Pelosi came out and said that they want to get that infrastructure bill through this week. They might not be able to vote on it until Monday, but I think that's why you're seeing a little bit of push into some of those industrials and that rotation trade still taking place, Kev.
All right, let's get to our feature segment of the day. And for that, we bring in a contributor across the TD Ameritrade Network, Miss Jenny Horn, to the show. My personal partner in crime and work daughter, Jen. Good to see you as always. And we also want to bring in Mr. Andy Swan, co-founder of LikeFolio.com. He's going to talk about our feature stock of the day, and that is Uber and Lyft, the ride sharing. Jen, we have a lot to talk about in this, and Jenny Horn is not a happy customer, make no mistake, in the Uber and Lyft world. Jen, take it away, fire away, and hold nothing back, Jenny Horn.
You know, I almost have to take a deep breath before I start to not get overwhelmed with my anger towards these companies, because at one point, actually,
pretend I'm your therapist, Jen.
Yeah, no kidding. At one point, Tom, we saw these names that were charging over 40% premium to their usual prices. So they made what was once an affordable service and great for someone like me who didn't have a car very affordable. And that sort of went away with the pandemic. A lot of people not working, a lot of these sort of, labor shortages completely weighed on Uber. But I have to say, the stock now up 20% month to date, and they just recently announced their first adjusted profit is actually possible this quarter, which is earlier than they had previously expected. They said their adjusted earnings may range from anywhere from a loss of $25 million to a profit of $25 million in the third quarter, which I think is sort of a safety net, because when you think about it, that is a huge range where I think that sort of gives them the leeway to say maybe not be profitable and then say, well, look, we sort of anticipated this. We made that the expectation. So I actually think that, given the fact that they only have a 50% chance of profitability in the third quarter is something to keep in mind. But they did say their fourth quarter earnings could range from flat to a $100 million profit. So that is a strong case for them. And it also sent Lyft higher as well. But after going public in 2019, Uber's shares have been on a wild ride in the last year and a half. They've sort of had to be on the defense. They've seen a lot of issues with their gig economy workers just sort of facing ongoing court actions with how to classify their drivers, whether they should be independent contractors or not. Plus, not to mention, of course, the pandemic. But I actually think that the pandemic has shown that this business is so much more than just ride hailing. They actually just landed a big bet on their freight business back in July with a $2.2 billion purchase of Transplace, which is just a tech-focused logistics service provider. But this will help extend Uber's U.S. domestic shipping footprint. Now, they also are moving into beyond just grocery or restaurant delivery, but moving into grocery delivery. And they just struck a partnership with GoPuff to sort of focus on convenience store deliverings. Plus, we just got news that they have a partnership now with Bartell Drugs and Rite Aid, who's actually purchased Bartell Drugs back in 2020 to expand sort of their pharmacy offerings. So now there's so many things you can get delivered through Uber Eats, which I think just makes it even more attractive to its customer. But, and of course, we can't discount how much Uber Eats has grown. In the second quarter, it nearly doubled its gross bookings from the year ago. So Uber Eats has sort of been its standout segment of its business, not so much the ride-hailing segment, as I assume many people are mad at Uber, like I am, just with these very high costs. But I think that, the noise on social media is a lot, surprisingly positive, actually, aside from maybe my own negative tweets, because people are right now like this optimism Uber has sort of, forecasted over the market. And they compare all these names, DoorDash, Uber, Lyft, Airbnb, sort of as one, being these hot IPO stocks. And that's actually what our first tweeter today talks about, sort of comparing Uber and Airbnb, two names that obviously saw success over the course of the pandemic, but have since had some volatility. So our first tweeter today says, Airbnb and Uber are large businesses and not growing as fast as my other companies, but both have been impacted by COVID. As the world reopens, these dominant businesses will benefit. Uber valuation is quite compelling too. Both charts look decent, large post-IPO bases. And so I had to include something positive so I wouldn't get completely biased. But our next tweeter today sort of echoes a lot of the same sentiment I have seen and I know others have seen, which says Uber in Boston, $68, wait 21 minutes. Taxi in Boston, $13.75, wait 3 minutes. Uber has an app though. So there is something to be said about the fact that Uber has made it as easy as possible for ride hailing. You can get basically a car to come right to your door. And I actually saw a very interesting response to this that said rideshare is actually not an expensive taxi. That's an impossible comparison. Rideshare is a cheap on-call black car service. And I actually think that's a very good point, where maybe too often we've compared Uber and Lyft to cabs since they've sort of taken into that space. But Andy, I am so curious because, we compare Uber to, say, a taxi, but maybe we should only be comparing Uber to its peer Lyft.
Yeah, well, I look at the two companies very differently from each other, actually. I think of Uber as a logistics company. They're moving people, they're moving things, they're moving freight, they're moving meals, whereas Lyft is a transportation company moving people. And I think that's the big difference between the two over the last year, is that Lyft was significantly impacted, almost down to zero in terms of ride sharing and transportation, whereas Uber was able to do other things. But what's crazy is, really that these price increases have had a dramatic impact on Lyft versus Uber in terms of consumer happiness, because once the price gets to a certain level, you're just basically upset with both companies. It doesn't matter anymore that the experience is a little better in a Lyft than in an Uber if you never get into either one, because neither one is available, or when you do get in, it's going to cost you $58, like the tweeter before said. So Lyft's competitive advantage against Uber is really being eroded away by market conditions, by these labor shortages, and their ability to deliver cars to people, because it's really typically been, once people get into the car, that they have a better experience with Lyft than Uber. But right now, simply not the case. And I worry about Lyft going forward because it doesn't have a diversified portfolio of offerings, and its strategic advantage, its competitive advantage, I should say, over Uber, which is making customers really, really happy, has all but vanished.
Yeah, and Andy, if you take a look at between the two companies, because I used to be only Uber for everything, I didn't even open my Lyft app, but now it's to the point where I came back from the airport. Uber was $78 to go 4 miles, and Lyft was $40. So now I'm actually using both apps, and I'm opening them at the same time, and I know they've got their algorithms set up that they know I'm probably going back and forth. But if you look at that, Lyft is cheaper now on a constant basis here in Chicago. Is that going to allow them to gain market share in that space moving forward, according to your data? I saw that Lyft kind of went above Uber at this point.
Yeah, I think so. In terms of gaining market share, I don't think Lyft is anywhere close to achieving majority market share. We've got Uber about 68%, Lyft 32%, so there's a long way to go. But I do think Lyft has an opportunity to gain market share as things reopen and as ride sharing starts back up. But it will have to be through the experience that does it, because that's what got Lyft where it is, and they don't have much else going on from an innovation perspective. Unlike Uber, which seems to be doing everything to handle local logistics, Lyft really wants to focus on taking people from place A to place B. In order to do that, the economy has to be open and people have to be moving around, and workers have to be willing to drive at this point, which is something that might not be there 5 years from now, but it sure is today.
Andy, this company's been open for approximately 12 years. They've never been profitable. Don't let that last quarter's profit fool you. It was one of those accounting things that made them profitable. But is this their game plan to get profitable? Is to charge people 3 times what they did before? Is that how they're going to get to profitability? Or is it something like they're going to deliver everything that moves or can be delivered? People, goods, liquor, right? Food, prescriptions, everything. Is that how they're going to get to profitability? Because at 3 times more, you're right, Jenny, it is a black car service unless your Honda Civic shows up like mine does every time I call an Uber, and that's not a black car. It might be black, but it's a Honda Civic. So it's really not the luxury ride we're talking about here. And if I'm in the city like you guys are, I'm out in the suburbs, a taxi's fun. Taxi does the trick too. So my question to you, Andy, what's their path to profitability? Is it triple the prices?
Well, I don't think so, because that squashes demand. I think that the path
Right.
to profitability for a Lyft, I think the only real chance is to eliminate the cost of the driver. And that is they're building out some self-driving capabilities. The whole industry is building out self-driving capabilities. I don't know how far away we are from that as a user. In my own car, I think it looks a lot further away than people tend to think.
Yes.
But, I do think that that's their path to really very high profitability. If you take out the cost of paying the driver, then all of a sudden that $58 ride can become a $30 ride, and it can go from losing money to making $5 to $10 per ride. It's an enormous part of the cost structure. It's an enormous part of the regulatory structure. And so I think that's the only path for Lyft. Now, for Uber, it's totally different because they have their hand in everything. They have multiple ways that a car can make money. And so I think that, from a path to profitability perspective, Lyft is really banking on one technology play, whereas Uber's really betting on a diversified approach to just moving things around locally, which is a fairly unsaturated market. FedEx and UPS can go global. They do that really, really well. But in terms of what happens inside of a location, inside of a geo, it's pretty open seas, and Uber's doing a good job of grabbing that.
So, Andy,
One of the more amazing things. Go ahead.
Go
Jen.
ahead, Kevin.
I was going to say one of the more amazing things in this relationship is the fact that Lyft hasn't really adapted at all. They haven't expanded. They haven't changed anything. They've really been, they deliver people, and that's it. Go ahead, Jen.
I was just going to say from I think like a macroeconomic standpoint, this company right now, I think you had a really good point of the driver, I think is the key, because from a completely like business 101 standpoint, this company makes absolutely no sense. The way they're trying to raise prices for their riders, but then the drivers want more money. I mean, I just think there's like a huge component missing here, and I don't necessarily see how they could be profitable in the third quarter. No,
it's going to be tough. The good news for these companies is that no one expects them to be profitable in a big way. They have very forgiving shareholders, and they have had since they started. And so you have to have that, you have to give credit to those investors that saw an Uber lose money for years and years before it even went public, and then now became public and is dominant in a landscape where it's nearly impossible to make money, but still has a huge market cap. So there's something there. There's something there, just like there was something there with Amazon for a long time. It took a long time for that to make profitability, but you can build a business without profitability for a really long time, but eventually you've got to have a plan to get there. And I think really probably for both of them, it involves it involves automation and getting rid of that driver cost.
Andy Swan, this conversation, we really could do Uber and Lyft week on Fast Market and talk about these companies every day, but we're going to let you go. That is Andy Swan, co-founder of LikeFolio.com. Always a great conversation and great data. Tom White.